Hello, welcome to another episode of Test, Optimize, and Scale. It is a privilege to have Tony Drockton here with us, founder, chief cheerleader over at Hammett. They have a top Reggae Plus campaign going on right now. We're going to talk about the Going Public show. Tony, pleasure to have you here.
Thanks, Jason. Nice to be here.
And I know we've had our conversations for some time now. Definitely want to familiarize the audience with yourself, with Hammett, but thought we'd start with your story. What is your background, Tony?
Well, let's go all the way back to the little boy from Cleveland, Ohio, born and raised there. My dad was an entrepreneur. He had a small grocery store in one of the suburbs called Convenient Food Mart. I started working there when I was 10. And I think this is an important part of every entrepreneur's journey. Like, what was your first time that you were in an entrepreneurial environment? And I grew up in it. Two brothers and a sister. We all worked in the grocery store, my mom. And I like to always say, I really learned everything I needed to know in regards to building a business, including Hammett, right there at that store. My dad kept it clean, always made sure if we didn't have what someone wanted, we wrote it down a couple of times. He'd say, wow, they've asked for it a couple of times. He would get it. And he turned a franchised convenient food mart into a first in so many. It was the first one to put in a deli. He was the first one to do party trays. He was the first one to cash checks. It's way back when. He was the first one to do delivery. We're talking about grocery delivery. We did. So all of these firsts came out of just listening to the customer. And then also the little simple things like greeting people when they walk in and walking people out to their car. So that's where I started. And then I actually started a lot of little businesses out of that store. I started Tony D's Hand Dipped Bananas when I was 12 because we had some dipping sauce and I was running the produce department. And I was like, there's really just fudgesicles and Nutty Buddies. And it's the early 80s. I said, I wonder if they'd love frozen bananas. And from me selling at his store, within 6 months, I was in 70 convenient food marts with Tony D's Hand Dipped Bananas all over Cleveland, Ohio. And I had people making them. I had people packaging them. I had people delivering them. Oh, wait. No, that was me. I was doing all of that, right? So that's the early entrepreneur journey there. And then I ended up going to Bowling Green State University, getting not only my undergrad in finance, but my MBA in finance. In between that, I'd visited California twice. I actually hitchhiked when I graduated high school from Cleveland in front of my dad's grocery store all the way to San Diego. And I touched the ocean for the first time down in PB, Pacific Beach.
Yeah.
Fell in love with California, but wasn't able to really stay. So came back after undergrad and came back after grad school. Luckily, while I was at Bowling Green, I had a professor, George Howick, who there was no formal entrepreneur program, but he had worked in business. He had a couple of startups that he'd sold in the finance industry. And he was one of my biggest influences on becoming an entrepreneur. He had his own makeshift program. I got a BSBA in finance, but his program was entrepreneur before it was organized. And George was teaching all of us, like, you can do whatever you want. You got to think like an entrepreneur. You got to think outside of the box. So I brought that out with me to California after graduate school. And I did what every entrepreneur normally did. I started selling Yellow Pages. Why? Because it was the best opportunity to make money. I was sleeping on a couch with my friends.
Sure.
And while I was interviewing, I had opportunities in pharmaceuticals and selling other things. But, the Donnelly directory, the last interview was a guy that actually went to Bowling Green. And I was already going to accept the position. He's like, I've always wanted someone from Bowling Green to work for me. And I was like, you guys, it's basically straight commission. Why would I be here? And he's like, you're going to work here because you can make $200,000 a year in your first year. And this is 1990. And I said, if you can prove that to me, I will come to work for you. He picked up the phone. He called the top two reps and they both were like, yes, this is what we're, and I'm like, I'll go for it. So door to door, really, really pounding the pavement, did very well. And I met one of my clients and we decided that we would start a roofing company together a couple of years into that by 92. Again, did very well. Was able to get the Joe Rogan of the time, which was Rush Limbaugh, to do our radio ads. And that just blew us up. We ended up opening 7 offices, built that up into the late 90s. And again, the entrepreneur's journey. I decided I wanted to try something new, and I moved from the roofing industry into actually your business, digital advertising, in the late '90s during the internet boom. It's where I fell in love with technology and what it could do for us. I'd
Yep.
already dabbled in it with the roofing company. We had a web page in '95 for the roofing business. We used Act and Goldmine for contact management, which is an old software. So
Really.
I sold advertising digitally in a couple of years, but by 2000, the internet was taking that little down swoop, and I decided to pivot again, go back to earning, and I went into the residential finance industry, and it was the mortgage time. 2000 to 2007, as you know, real estate exploded, interest rates dropped. Once again, I thought I was a genius because everything was working. But in the end, I got really lucky in roofing, and I think I got even luckier in mortgage, did well financially, got married, had a kid, life kept popping along. And then I was like, my passion just wasn't in selling money. So I took a couple of years off, and in the middle of 2008, I was introduced to Stephanie Hammett right here in the South Bay. She had these beautiful handbags. I was really attracted to them because they were architecturally different. By the way, I love art, architecture, design. It's one of my passions. I just never thought I could be in the fashion industry. So I just invested into her business, and pretty quickly found out that she needed a partner to run it. So I took control within the first year. And next thing you know, I was in the fashion business. That was 2008 to 2009. I'd say the biggest lesson early on for every entrepreneur is don't underestimate your capital needs, because I was self-funded. We went into the Great Recession, 2009, 10. And, I'm not entrepreneurs. We just don't quit, right? We push on through. So
Yep.
I loved the industry, but it was extremely challenging in those first years to figure it out, undercapitalized and undereducated as in what's called luxury fashion. If you think back what I've done in the past, from the chocolate banana business to, construction, yellow pages, even digital advertising, those are commodities. What I do now is a luxury product. It's not a commodity. It's a completely different business model. So I think that area in my life was my huge shift. I was able to hire my first coach who helped me grow personally, who helped me understand what business I was in. He was an ex-VC, private equity guy, still our coach today and a board member, a guy named Ken Deemer. And he helped me navigate going from focusing on small business to really building something that could be much bigger than myself and last multiple generations. And so we slowly each year, Hammett, it grew every year. Profitability was a little bit elusive, let's say a lot, but we kept growing and we kept adding good people. And, the whole focus for Hammett was to really bring luxury back to America. There's a lot of handbag brands that we all know the names and we love, but most of them lost their way at some point. And that's why the Louis Vuittons, the Gucci's, and the Pradas have been so popular here, because the luxury customer identifies with those fashion houses and what they represent. And that's what I wanted to bring back. And wanting it is not the same as doing it, Jason, but every time I've had a little roadblock, I'd say, what can we do differently? And the key is to keep that North Star. We focused on it. So 4 years ago, I said, I need some help. And I brought on a CEO, Andrew Forts. And I got to tell you, in every entrepreneur's journey, there's a time, I think mine was this time, where I was like, I can't do this alone. And I need some really great help here. And who can I look towards? And I had to look towards somebody that had already been there and done that. So Andrew was the founding COO of Jimmy Choo when they launched, took it to 80 million. Prior to that, he launched the Vidal Sassoon salons. Post that, he launched a little brand called the Kardashian clothing brands. After that, he worked for a company called Bed Stew. And then he joined me as the CEO 4 years ago. And since then, he's charted us on a rocket ship path from a little less than 10 million when he joined, and we're tracking for more than 50 million this year. So he's a great leader, and it has allowed me to free up to be a founder, to be that chief cheerleader, and stay focused on what I really enjoy. And that's kind of what we're bringing up today. What do I enjoy? Well, I enjoy the passion around building the brand. I really enjoy the digital marketing. I always have the technology, the tech stack. And I love talking to people one-on-one, traveling around the country, meeting our fans, talking with our business partners, that community aspect. So not a big spreadsheet guy, not an operational expert, as you can see by prior to Andrew joining, but that's okay because I now have somebody that is. And here we are. Let's go.
There you go. I love it. And you know your strengths, you know your weaknesses. I felt like I was along the ride the entire time with you there. From the grocery mart as a kid, I actually learned from my father's business and starting at the bottom in the warehouse, from Tony D's, dipped bananas, and being
Yeah.
in 70s stores. I mean,
Whew.
I just
It was
imagine all the
crazy.
conversations.
I was really 12. I had to pay someone to drive me around.
Your bike wasn't doing it.
No, definitely not. Definitely not. Let's just say I probably wasn't compliant carrying food in the back of cars, but hey, you keep going, right?
Yeah, exactly. And that's where you really learn from, right? Not just
Yeah,
the things
right.
that go right. As you said, I think it was for the digital marketing business, residential finance, where you're like,
Yep.
hey, I thought I was a genius because everything was going right. Then these
Everything.
events occurred. And that's where I really grew.
Yeah. Yeah. You know what? Going back to those two big paths. I mean, when I got in the roofing business, there was a drought for 6 years out here in California.
Mhm.
And suddenly, not only did it rain like crazy, but we had this horrible earthquake that ruined every structure down in Southern California.
Yep.
And then it rained more, and then we had fires. So this was a period where anyone in roofing would have made money. I thought it was all me. And that's probably why I lost my way. I wasn't passionate about it when it comes too quickly. And it's very similar in mortgage, that it's just all of a sudden with interest rate dropping, everybody was refinancing and the housing market was exploding, very similar to the past couple of years, right?
Yes.
So I think my best lesson was when I finally was, I don't have any money and no one will loan it to me. And this fashion business is tough,
Mhm.
very tough. But it's when I got back to the basics and I said, what are the great houses? The ones I talked about, Louis Vuitton, Gucci, what do? They actually harken back 100 years at what's always worked.
Mhm.
And that's how they're going to be around the next 100 years. So I really avoided these quick pivots. More, I kept focusing on where we want to be long term. And
Yes.
the quick pivots were just survival. How can I survive the next week, month without completely losing our way? And that really changed how I thought about things. So I never fell for brick and mortar's gone. No one's ever going to shop in stores again. Whatever the latest fad was in retail, that wasn't what I was concerned with, because
Mhm.
I knew to build a brand, you need great partners. You need to have an amazing product. You need to make sure the experience before, during, and especially after the purchase was the best it can be. And the customers will come back. And it doesn't matter if they're buying from Dillard's, at a specialty store in Chicago, or at one of our two stores out here, or online. You have to make sure that it's an amazing experience. And that's how you build the business.
Mhm.
All the other stuff that they tell you to do in the short term, it's kind of fluff
It's
because
true.
it's only going to work in the short term. It's not going to bring you where you want to go.
It's got to be that long game, where you want to go. And
Yeah.
I've been to the store in the South Bay here, live in Marina
Oh,
Del
yeah.
Rey. I hear a lot of the key attributes of why Hammett is where it is today. Like you said, Andrew came in, all this experience. I think you guys were at 10 million at the time. You're pushing towards 50, projecting 50 this year. There's been substantial growth and momentum. I want to point out to listeners, it's because of what you're mentioning here, that experience that you're creating, not being too phased by different headlines and being reactive and trying to figure out a direct response campaign for the next month, as much as setting yourself up for long-term growth.
Yep. Yep. And, if I can draw on one more thing is, and I can't remember the name of the book, by the end, I'll remember it. They said there's athletes they've studied, the ones that specialize too early, 10, 11, 12. The majority of them end up burning out and not even making the majors.
Mm,
Some of the best athletes are the ones that played multiple sports
yes.
all the way even through college. And then they became really good at their chosen sport. And I think that's really what my strength is that I can draw on digital advertising, construction, finance, real estate. I can pull all of those in right now. And that's why I understand real estate. I understand location.
Oh yeah.
I definitely understand the numbers. And then I also have a pretty good heartbeat on technology. And most importantly, managing different types of people, from people that run our fulfillment center all the way to working with CEOs and executives. I've had all of those different type of people in my past companies, and including when I work for others in between. So all of that comes together in the entrepreneur's journey to where I am now, which is really, I think, building something special.
Sure. Now, you're in a very challenging space. As you mentioned, some of your competitors date
Yeah.
100 years back or more. As a early stage company, let's take it back 2008, 2009, and I know there was already traction at that point. How did you map out your path? How did you say we're going to actually go side by side with these groups? How did Hammett set its mission?
We didn't. This 100%, Jason. It wasn't. It was really the first 5 years was just learning this industry. I know what I didn't want to do. I didn't want to do anything that felt in my gut that was incorrect for me. Kind of like what would your mama think, right?
Yeah.
So early on, the best advice that I got was a lot of the advice I didn't listen to. So if someone's like, well, that's just how everything's done in the fashion industry, my little spider sense went up. Ooh, well, let me see, let me listen more. And if it didn't resonate, that wasn't how I was going to do it. So one example would be like lots of different prices for your retailing partners. Like, oh, if they buy a bunch, you give them a discount, and then some you do this, and if you can get a higher price for people that don't negotiate, we set standard wholesale pricing early on. No negotiation. It was the same. Even to today, Dillard's pays the same for one unit as my brand new boutique. There's no special.
Mm-hmm.
That's very unique in this industry. So in the software industry, it's not that way. That's always one of those things. You're worried if you got the best deal, right?
Yeah.
So I really like that philosophy of sticking to your guns on pricing. And that transferred into the retail price of our product early on too, is we didn't allow our specialty stores to charge whatever they wanted to, or Dillard's. There was no discounting, MAP pricing. So those we set fairly early on. And again, it's because of experience.
Yep.
We heard from our fans. They're like, we hate the fact that you're 40% off in Bloomingdale's. So we stopped selling to Bloomingdale's.
Mm-hmm.
That was my first lesson. So, but once I figured the industry out, 3 to 4 years in, took me that long, then I started to think, okay, we can do something a lot more like the European fashion houses than the current American competition. Mm-hmm. And we focused on that.
And how did you position against the current American competition? What have you guys put in place to stand out? And I know it's a couple questions deep at this point.
Yeah, no.
Such a, like you said, luxury, premium. I know there's women in my life that'll only have handbags from this brand. I pointed out your line to them, and they started pinpointing, oh, I want the fanny pack. I want this. I want that. How have you guys been able to build your brand and really stand out in this aggressive market?
Well, number one, I never was that horror movie where you're running and you're looking behind you and you're like, no, we were just running. So we really didn't care what the competition was doing ever. Okay. We knew if we could be a higher quality and value, we would win. So we always made sure our product delivered on that. That was number one. And then number two, for distribution, we avoided all of the promotional distribution channels early on because we saw that's where the brand was degraded so quickly for the brands that we don't need to mention in this space, right? So we avoided that. And then number two, we actually avoided the super luxury distribution because those were the partners that wanted deep discounts. They wanted to be able to do whatever they could with the brand. So we found that middle ground. Mm-hmm. Specialty stores, Dillard's and Von Maur, family owned, that would maintain price integrity and product integrity to us. I think that was the greatest decision going back 10 years I could have made. But at the time, it was difficult because everyone would say, well, where are you carried? Well, how come you're not in these stores? And I never wanted to disparage. I would just say, well, we've just chosen to go a different path. But in the end, most of those stores are out of business. Bergdorf's, Bendel's, Barney's, they're gone. Because in the end, they were so high end, or they thought they were, that they missed what the customer really wanted. They just wanted a brand they could really identify with and carry for more than just a reason or a season, I say for a lifetime. And that's what we were bringing to the table. So the differentiation was that. And then the second was, on a price perspective, we always wanted to be above those kind of incumbent brands here in the US. We always wanted to be positioned much lower than the luxury brands of Europe. And we wanted to make sure that our product and overall value proposition positioned us there. So we were the best value in the eye of our customers. Mm-hmm. And we wanted to see if we could build a repeat business, because let's face it, how many handbags does a woman need? And that the challenge there is to have enough freshness so that they could buy another one, but not so much that you're always discounting because you have extra merchandise. So the secret to that is building a core line that's wide enough that they will have staples that they will buy over and over again, and then they'll pepper in a fashion product. So that's that's the hardest part, getting that mix right. So
And it sounds like you guys have the formula down through trial and error, through your own learning, as you mentioned. But it
yeah,
shows, looking
thank
at
you.
your current growth. I took a glance at your traffic numbers. I
How
looked
how we
a
doing? How
while
we
back.
doing? I don't look at it, but I know they're good.
They're good. They're very
Thank
good.
you.
And,
Thank
time spent, the bounce rate's low. Everything comparatively is very strong. So I'm a numbers guy. You mentioned your trajectory for this year. I look at the digital analytics. It's working. Those
you.
staple products, peppering in the different fashion items on top of that. It's remarkable to see, because again, it's a vertical that I know if it was brought up in an entrepreneur center, I think it's some of those early recommendations you were saying that you were getting and you steered away from.
Yeah.
It's not the easiest space to enter, and you guys have been very successful at it.
Well, and it might be a layup on a data conversation here for us, but by the way, we launched on NetSuite 13 years ago. Why? I was already familiar, as I said, Act Goldmine. Data was key even in the early 90s. So that allowed us to, even though we weren't monetizing that data early on, we've been able to take all the best from our historical data and factor that in to all areas of the business. So the most obvious one is in design. So we have a 50-40-10 rule. 50 core, best sellers, we never change them. All we do is hopefully improve the quality every season. 40, that's fashion. So that fashion assortment is based mostly on historical data that we've been tracking for years, so that we're able to iterate colors and materials, and that goes into the next season and the following season, and we're able to bring it back every year for the same time of year, but it's a little bit different. But we know there's a real big chance that this will work. And then the 10, do whatever we want. My design team gets to go crazy. They just got back from Milan. Last week they were in Paris. They can just go for it. And that's where we find our new winners from out of that 10. Or if we have what's not a winner, we learn from it. So that philosophy also has allowed us to manage the inventory so that we don't have to go deep discount on anything, and also to scale so quickly. I can mention growth. I mean, we grew 83% year over year last year. We've more than doubled since the pandemic started, Jason. And year to date for 2022, we are up over 100% overall. And that's a lot from the design side. And then when it comes to the operational side, again, a lot more of the same. It's really data driven on fulfillment, on rolling out our own stores, even on hiring. We take a look at the numbers and we say, what do we need to do to iterate and make things better every time? Our cost structure. I mean, it's very hard to grow those percentage rates and to do it profitably, but we've been able to do both, and we've done it on a very low capital base. We've raised less than $5 million in our history to get to the level that we're at.
And that brings to the next topic. Mentioned the Going Public show. You guys are doing a Reg A Plus equity crowd fund, which allows accredited investors, retail investors to participate, to actually own shares in the organization. How
Yeah.
did you choose to go down this route of Reg A Plus? I imagine you have a lot of access to capital. What was the Hammett strategy? Why did you guys choose equity crowdfunding?
You know, I've been researching it for about 3 years, and I'm also an angel investor in some of the picks and shovels, King's Crowd, and some of the others out there. So we contacted early on, and I was like, "Hey guys, Tim, Jason, what's this industry like?" You made some great introductions. In the end, we had done a small private equity round. We were portfolio company of the year after, and that was great. But you understand what that relationship looks like. It's very transactional.
Yes.
We really believed. I heard another podcast, instead of calling it crowdfunding, you called it the private capital markets. I love
Yep.
it. I believe the private capital markets gave us this huge opportunity to have a deeper bond with our customers and to really grow that relationship beyond just our handbags. And so that's why we decided to go for it. And even then, it took us another 6 months to decide on our partners. Big shout out to CrowdCheck and Dalmore and everyone else up there that's helped us. But completely transparent. It's still, we're in the third quarter, and I'm not satisfied with results. It's hard. It's a challenging thing to do. And I say, though, that that's okay, because I told myself this is not a one and done. Crowdfunding needs to be philosophically built into your business and to your cap table. So we know, even if we had too lofty goals for this first round, which we shoot high, look at my growth rate, we're going to get enough success and have enough base that our second round is going to grow from there. So that's the goal. So we really chose it really for that, for the brand building, for the relationship building, and for the long-term health of our cap table, because these investors are long-term. They're not transactional. These are our fans. You know what's interesting? Over 80% of our investors so far have been women. And if you know anything about the numbers in this space, it's majority men. So, and I call a couple a day after they invest, and they always pick up, or they leave a message, they call me back. And it's really simple. They're like, I love your brand, and I just wanted to have an investment in it. And then I usually say, have you ever invested in the private markets? And almost everyone is like, no. So they're not only first-time investors into the space, but they're also women, which makes me feel really proud.
Those numbers definitely stand out. And again, based on the 84% growth, it's an opportunity that stands out among other groups out there, even just your revenue and what it means for the industry. I've worked on hundreds of these campaigns, and that stood out in our conversations from the beginning of, wow, this is a great opportunity for Hammett's target audiences to get involved. We look for user owners in a lot of our campaigns. So as you said, building the brand, bringing more partners. I love the fact that you're calling them firsthand. I imagine that only leads to good conversations as well.
It does.
And what about the show going public? Monumental for the industry, and you guys are one of the stars. How has that been? What have the surprises been like? What has the overall experience? What has the overall experience been like for going public?
Well, first of all, I could give them a huge props. I mean, the production company did Biggest Loser. So it's the highest quality production. And the teams worked very hard. We started shooting. We were the last company in for this season. We started shooting regularly in August, and we shot all the way through early February. So episodes started dropping. I think we're episode 7 this week out of 10. And lots of accolades from friends, family. Loved the scene. I had a lot of fun shooting it. I think the biggest surprise, number one for me, was when I look at Andrew, our CEO, and myself after we've shot it, I realized the best scenes are always the ones where we were just relaxed and organic. When we tried to plan what we were going to say, they probably cut most of it out because it just doesn't work. Just telling our story. I think the second part of it is that I think the biggest surprise was how hard these guys work that shoot 12, 14-hour days. It's crazy. I could never be an actor, and I definitely don't want to be a producer or director. They work even harder than entrepreneurs and startup people. So it's the first season. It's the first time anything's ever been done where people can click and buy stock in real time while they watch a streaming series. So I knew it was high risk and high return going in, but I looked at Shark Tank and I said, you know what? It took a couple of years till people really got it. But even if this first season doesn't rock it, you only get one chance to tell people you were the first one to do something. So Hammett is officially the first brand to ever live stream a television series where you can buy stock in. And that will live on for many, many years. So the long-term brand equity for us is there.
And I think it's going to be game-changing for the industry, for the retail investor, all levels at that. Like you said, the pitch style show, you referenced Shark Tank, but for the audience to be able to participate directly,
it really is.
It's going to be the beginning of a whole new era.
Yeah. And, it really challenged myself and Andrew to learn how to pitch. We're not great at pitching to raise money. So it really, we did the money show and we pitched in billionaires and we kept still pitching. It made us get our game on all the time. That's the third piece that I forgot to mention.
Sure. I was actually, I spoke at a conference called The Money Show last week in Vegas, and you guys are naturals. So it's I think you have the.
How'd you do?
Well, I was on a panel for digital assets, so more on the educational side, and then speaking with investors afterwards. But again, it definitely stands out to me, and you're really a wealth of knowledge going through your whole history here, what you've done in equity crowdfunding, which puts yourself in a small percentage, even where you guys are at today. I think where it ends, you'll be looked at as one of the top campaigns, and like you said, early in on this whole financial publishing medium. I wanted to see if I could get a few recommendations from you for listeners, for founders. And to the nature of the show, test, optimize, scale, my philosophy towards marketing, or philosophy here toward a DNA towards entrepreneurship as a whole. I look at any marketing launch, any product launch as a test that can later be optimized, scaled. What tests have been the most fruitful for you guys at Hammett? What marketing channels, what tactics, what approaches, what partnerships would you tell an entrepreneur, hey, you should definitely go down this road. You should definitely check this out. This is something that can be very valuable to you.
Well, I have a process I like to say of the testing, which is this: when you're really new, make sure whatever amount of money you can lose, that's all that you test. So I used to say, I'll make my first 5,000 mistake and I'll survive. And then my first 50,000, I'll survive. And then my first 500,000 and I'll survive. So the 500,000 happened many years ago when we launched footwear. It was a complete disaster. And it just didn't work at all. And it was painful, but we made that choice to take that to test when we could afford to have that loss. And by the way, there was lots of wins in other areas that kept going. Now, what I like to say is we're going to have our first $5 million mistake and eventually 50, and you're just going to keep going, right?
Yeah.
So that's our process for testing. We only test what we can have complete failure and it's okay. And that's how you find the big ones. So I would say for us, we were a wholesale brand for 10 years. When we decided to go D2C, we already had a base of revenue, successful sales in our wholesale channels. But instead of just jumping right in from D2C, I hired a coach and he coached me 5 years ago for a year. And I learned all about the business, what I could do. Then we finally reached out to agencies that we knew of, and we got our first agency in. And even then, we didn't bet the farm. We focused on it being 5 to 10% of our revenue. So when it comes to building the D2C, we build that without sacrificing all the hard work and the relationships we've already had. And so that was the second part of testing, is we tested different methods that we could scale that didn't violate the trust we'd already built with our wholesale partners. In the fashion industry, there's a lot of discounting, there's a lot of promotions, a lot of coupon codes. We didn't do any of that. We said we want to build direct to consumer and still lift the other boats. So I would say for anyone trying to build a D2C business out there that also has relationships in other areas, do the best you can to not violate them and keep building from there. So here we are today, and our Hammett.com business is exploding. We more than doubled during the pandemic. But what's funny is our wholesale business is growing even faster. It's growing faster in all the categories because of that long-term relationship build. And you understand ROAS and CAC and when you can amplify that with wholesale orders, you get almost a 2-for-1 pop, especially if they're high margin, which ours are. So that's our test. That's my test out there for you. Does that answer what you asked?
To a T. And you said the ROAS, the return on ad spend, the CAC, customer acquisition costs. Not only did you dial that for D2C, for the direct to consumer, but it had an impact on your wholesale. Those numbers went up, almost served as a marketing tool on its own, all in addition to the pre-existing relationships you guys have had there, which have been a long game. You've really been able to put a foundation around those.
100%. And Jason, when we opened our first retail store, South Coast Plaza, all of a sudden COVID came, then we had to close it, right? But we had enough history prior that we saw that it was increasing our overall online. Once we opened back up, we really started to measure that. We were able to say Orange County grew this much percentage faster overall. We had higher engagement. The cohorts around it were just better fans. And that's how we justified opening our Manhattan Beach store during the pandemic. I said, even if right away the numbers aren't great, I know we're going to get a whole lift in LA and also around the country because there's so many tourists that come to Manhattan Beach. That was such a winner. And the numbers have shown that it's not just what we sell in the store, It's what we sell overall online and those customers that go back around the country, and how do those markets do? And that's how we signed a lease for La Jolla again during the pandemic, and we're building that store right now. So, right now bricks and clicks are hot, omnichannel is hot, but we're still doing it in a data-driven way.
Okay. And Tony, while you're going through all of these tests that were successful, you've obviously been through some strong optimizations, and since 2008, what are different insights toward founders for how to optimize? Maybe if a channel, an approach, a product isn't working right out of the gate, what is the best way to regroup and manage it to a point of effectiveness?
That's a wide one. I can focus on our digital spend. So,
Okay.
so last year, prior to the changes, 14.5, 15, iOS, privacy, we were really scaling our Facebook, our Instagram, our Google. And luckily, we layered on top a software called Measured, which uses the classic scientific method of control, test, and scale, kind of similar to what you say.
Yes.
Because we already had that foundation in place, we were able to lean into our Facebook spend, even though Facebook reporting was showing us it wasn't working. And it's how we were able to grow our D2C business so strong last year with those measurement headwinds. So what we did is we went into our gut to answer your question. We said, we know things are working, but now the reporting is showing it's not, at least from Facebook's side. But what can we do to ensure that we can continue to grow? And we leaned in what had worked prior, and we actually tested out new cohorts with that measured product. Also, we were able to continue to scale our spend, which continued to scale our revenue overall.
Mm-hmm. And as you're going through that process, obviously it's been productive for you. The percentage growth you had last year, the year over year numbers, how do you mastermind the scale process? How do you say this is working? Here's what we're going to use from Measured and these other platforms to determine where we're going from here. What types of recommendations do you have for founders on how to scale once it's working? Because you've been such a clear example of it.
Well, I'm an old. I don't know if you ever heard. There's a blog called Farnham Street. It's Farnham and I've been listening for years. And they talk about mental models, and they talk about first order thinking and second order thinking. So the basis is really simple. First order thinking is, hey, this is working. Let's do more of it. Yes. But if you think second order thinking, wait a second, why is this working? And is this going to affect my longer term growth? If that's ever the case, we don't do it. That's why when you sign up for an email, you don't get 10% off, because we don't start relationships with a discount code. We know that by looking back at past cohorts, when we had tried that, that was the worst performing long-term relationship. Got it? First order, great. Second order, we're not going to win. So what we say to ourselves is, even if something is winning, we try to go to second order and say, wait a second, will that continue to provide long-term success? And we really delegate that down to the team members to make fast choices. And their only rule is to not violate brand. Got it? So grow, but do not sacrifice brand. And when I say brand, I'm talking about not just the product, I'm talking about our relationship with all of these associates on the wholesale floors around the country. During the pandemic, we made a promise that we were going to continue to support these partners as long as they continue to support us. We kept all of our employees, and we even hired right during the beginning of the pandemic. We knew with our people, we could make it. Without them, we were done. Second order thinking. First order would have said, burn the boats, cut the overhead. Well, as you know, by July of 2020, things weren't so bad. The government came with support. Retail was online, was booming. We needed our people, right? So I would say we delegate it down to our people. We have them think about the second order effects. I use a lot of mental models to make quick decisions. And if you don't know what they are, it's too not to go into them, but they're these quick ways of thinking about things in a different way with biases and deep historical knowledge of what worked. And that's what drives me in my decision making every day. And I try to influence my team members to be the same way.
Mm-hmm. I got to tell you, this really stands out from a lot of the conversations we've had with just looking at revenue and valuation, earlier stage companies, I mean, even just the second level concept, I'm
Yeah.
definitely going to be emphasizing this to my team, but
Oh,
want to
good.
point out, when I look at successful Reg A Plus campaigns, and yes, private capital markets is a better term than equity crowdfunding. When I look at the most successful raises there, the founders always stand out to me. And
Yeah.
I'm hearing in a lot of the language that you're talking about, the commitments that you made to your team, your vendors, your partners, as I imagine it's reflected to the investors, being familiar with your pitch page and some of the messages from the show. So that has been the commonality in these successful campaigns. So I think it's no accident that you guys are where you're at, and
Yeah.
appreciate you breaking down these formulas for us.
Thank you. Yeah, and we're still moving along in it, and I'm really excited. And once again, we don't make short-term sacrifices, even for our crowdfunding success. We
Yes.
know this is a long-term relationship, right? Even how we priced it. You can price it any way you want as a founder, right? They say that's one of the great things of doing crowdfunding. For me, I want to price it so that the next round and the next round, it gives an amazing return. Because remember, these are our fans. These are people that already trust and know us. So the worst thing I want to do is put myself in a situation where I got to apologize that we didn't give a great return on their investment. So that was an important decision for us early on. And, we came out and said, hey, 4 times revenue, we think is going to be great for last year. We broke the revenue goal. So it was really less than that, like 3.5. And it's still there today, even though we're going to be more like less than a little over 2 times revenue, right? So,
and just to begin wrapping things up here, Tony, you've been able to give your full history, the differences from Hammett and other brands, and how you guys have been able to really thrive in the market, as well as all the thought processes for Reg A Plus, for your role in the going public show, and where financial publishing is going, as well as these great recommendations. Is there anything we didn't get to? Is there any final messaging that you'd like to leave the audience with?
I would say other founders and entrepreneurs, if you're doing anything to maximize your valuation, you're probably not doing anything. It's that simple. If you're doing to maximize the value of your brand, to maximize how much passion you're going to have for the business, not today, but next year, you're probably building something pretty amazing, even if the markets don't recognize it today. So in our case, there's no other luxury brands doing equity crowdfunding. That didn't scare me. In our case, we have to convince every one of these women investors to get into the private market. That doesn't scare me, because I realize that we have almost $100 billion market established in what I'm doing. It's a massive market, and we're growing, and we're going to do very well in that. So those 2 things didn't scare me. I know that in my heart, we're building a brand that I'm passionate about, even if it's not going to be immediately recognized by the retail investor, because they're really going to love it 5 years from now when we continue to perform. So yeah, really as simple as that. I don't focus on that short-term valuation. Meaningless to me. It's all about the long term.
Maximizing the value for the brand long term. Don't look for short term gains. Don't be nearsighted. Look at the big picture. It's obviously been playing for you guys in 2008 onward, and really only the beginning. Having the familiarity with the brand that you guys put on the offering page. Would like to invite all listeners to check out. Tony, what is the best place for them to go? What is the best starting point for their journey if they're looking into Hammett right now?
So I'm going to go on a limb. Number one, it's email, tony@hammit.com. Number 2, my direct cell phone, 310-259-5200. No one will text me, and they're not going to call. If you want to meet a founder and an owner, reach out to them. I just gave you the 2 ways, okay? And by the way, I love talking to small, up-and-coming entrepreneurs, and I would really enjoy talking to venture capitalists, investment bankers, anyone that's on this pod. Love to hear from you directly. If you want to see us in action, you can go to hammit.com, HAMMITT.com. And if you want to see our offering, it's invest.hammit.com as it currently sits out there. We're almost finished with our 2021 full audits, so those will be up, I'd say within the next 30 days, if not sooner. And lastly, of course, LinkedIn and a million other places. But if you really want to talk to me, you've got my cell phone, you've got my email. Let's do it.
And I highly encourage listeners to do that. Tony, I think that's a first for the show, is getting the cell phone number. Direct email, been done, but cell phone, that it says a lot. And again, encourage listeners to get in touch with you there.
Awesome. Jason, this has been great. Thank you so much. The conversational path that you go on your podcast, it makes me want to listen to everyone. I really love that.
Thanks, Tony. I appreciate that. It means a lot. And that's why we do it. Listeners, appreciate you tuning in today. Again, reach out to Tony. Check out our next episodes. Thanks again, Tony, for joining. And we'll see everyone again next time.